Hello and welcome to BloombergQuint. I have Uday Kotak here with me to talk us through what he expects will be the key challenges facing the global economy and, of course, India. Mr. Kotak, welcome to BloombergQuint. Thank you for speaking with us. Let me start by asking you whether you think this year's Davos is characterized by a sense of uncertainty because of what President Trump, Brexit, elections in Europe may bring about, and therefore leaves a big question mark on what that means for emerging economies like India.
I think the biggest economy in the world, the United States, is going through a major transition politically.
Yes.
And of a kind which I don't think the US was, or a lot of the US was psychologically prepared
for.
So we got to give it time, and I therefore believe that the Trump presidency, we should really give it 90 days for us to be able to figure out what the true colors are.
Okay. Brexit, elections in Europe. Do you expect this to be a year of heightened, populism as they're calling it, protectionism as they're calling it, and therefore again a negative impact on emerging economies like India?
My experience over the years is that when a year starts easy, it gets tough by the end of the year.
Okay.
And when it starts like looking tough, it gets better through the year.
Okay, fine. So it's going to get better. Let's hope that's going to be the case for India as well. At this point in time, we're looking at maybe losing foreign portfolio funds, which has already happened over the last couple of months, to the US because of higher rates, a stronger dollar. Given that most business leaders seem to think that the US and the UK, surprisingly, are stronger economies right now, we may lose a lot of direct investment to them as well. What are the prospects for the Indian economy in 2017?
I think divided into two parts, economy and markets.
Okay.
On the economy, I think India still continues to be the bright star in the world, not just because our domestic GDP is 7% or 6.5% or 7.5%, whatever that number is, but look at where the rest of the world is. Okay, and Indian macros are extremely strong. And I believe that as long as oil is below 65, India is in good shape. And a lot of the stuff which, if you look at the current account, the inflation, the fisc, we are in pretty good shape. And in fact, we have room because while the rest of the world is thinking about increasing interest rates, India is still talking about bringing it down. So you have monetary space, your fisc is better, current account is better, inflation is under control. So macro India is probably one of the best places in the world.
Okay, except that macro India went through a considerable blip in the last 2-3 months on account of demonetization.
But that is event-led, and frankly, in the context of the global perspective, which is what we are seeing at Davos this year is significantly more focused on Trump, China's response to Trump, what's happening politically between US and Russia. The Europeans are trying to figure their way out with all the political stuff going on. The UK doing its Brexit. So in the global scheme of things, while we in India feel demonetization has been a significant event, which it is, in the global scheme of things, it doesn't look as big as we in India think.
That's fine, but in India, what do you think the impact of this is going to be? The jury is still out on it. Do you think this was a good move to begin with?
In my view, if this leads to culture change, which I believe it will move the needle, it will lead to hopefully better tax compliance and a better tax to GDP ratio over time.
Will it move the needle enough for that improvement in culture to compensate for what could be potentially crippling to the informal sector? Or maybe you believe it's not going to be because a lot of the money has come back?
No, my view is between the informal sector and the formal sector. The formal sector is where bulk of the recorded transactions are, and therefore if the movement happens to the formal sector, which is relatively the cleaner sector, it's a good thing for the country. You're getting to greater transparency, cleanliness, and better outcomes over time. Yes, the event has had impact in November and December, but I think things are beginning to normalize.
Beginning to normalize?
Yeah.
Do you see the need for a fiscal stimulus to counter maybe the ill effects of demonetization, especially on the weaker parts of the economy? Or as some economists are now arguing, that a lot of the money has already come back, and that in a sense allows for the banking system to lower rates, which is also some form of stimulus to industry, and therefore we don't actually need a fiscal stimulus. We should not veer away from the path of fiscal discipline.
I think it depends on how you define fiscal stimulus. By March 17, we will be at 3.5% of GDP. The estimate has been 3% of GDP by March 18.
Correct.
Instead of 3%, we are at 3.2, 3.3.
3.5?
I don't think it's the end of the world. I mean, psychologically, if you ask me, 3.4 is better than 3.5, but even at 3.5, it's not the end of the world. But ideally, around 3.2, 3.3 is a good place to be. And on the interest rate and monetary policy side, I think there is room. Banks have been dropping rates more sharply, as we have seen, and combine that with the fact that the rest of the world is, including the US, is talking about increase in interest rates, and India has still some room to go down.
Okay, I'm just curious to know, even if we were to give up fiscal discipline and go up to, like you said, 3.4, 3.5, is that really going to be the solution to the lack of growth in the economy? Will it also help resolve the lack of private investment? Because those numbers have only been declining over the last few quarters. Doesn't seem to have worked in the past, crowding in private investment. So is it going to work anymore? Are there other solutions that the government should consider?
I think keep in mind, number one, the government needs to increase its spending, which I think it will on the capital expenditure side, including through its public sector companies. And keep in mind that you're going into a more protectionist world. Therefore, some of our exports are getting pressure of barriers being created worldwide. And on a relative basis, the Indian rupee has been reasonably well behaved. So a currency which is not depreciated like crazy, and I just think about the yen. The yen has depreciated 18 to 20% in a year, which is a huge stimulus for Japan. Therefore, beggar thy neighbor risk of a currency war is something which one has to be careful about, because that can give you artificial steroids and growth. So India has had a more stable path on currency, still has room to reduce interest rates. Its fisc is in control. Raw material prices, including things like commodities like oil, are not out of the charts, though they are a little higher than before, which is not a bad thing. So you are in a perfect spot at this point of time.
The 10 years come down to 6.4. I mean, what's your view on rates from here on? The last time around, the RBI did not move. Do you expect that there is possibly, the potential for a rate cut before the fisc is up, fiscal year?
I think you got to look at the US. My sense is, based on talking to most experts, there are 2 rate hikes in the US this year, and the US 10-year around 275 to 80 by end of this year. So if that is where the US is, which is priced in, I think India has room for 1 or 2 rate cuts of 25 each. Therefore, whether it's 5.75 or 6, we can debate from the current 6.25. But that's where I see the rate cuts happening. And that brings me to the view on the 10-year, Indian 10-year.
Yes.
I would say in the range of broadly 6 to 6.5, 6.6.
Okay, this currency battle that many people are envisaging will happen this year, especially with the strong dollar. And then, just yesterday we had President-elect Donald Trump tweet, I think, about how he's not in favor of a strong dollar. It's not quite clear what will happen to currencies in the year. At what level of the rupee are you comfortable? And equally, many Indian companies have dollar debt. Do you see that becoming a big problem for them?
I think India is better off, and Indian companies are in better shape than a lot of other companies in Asia. And my view on currency is simple. Stick to the knitting, which is differential in inflation rates between the US and India. That should be the level of depreciation adjusted for productivity. So around 3-4% a year depreciation of the rupee is what I think is a fair basis to look at.
Okay. One of the other issues that demonetization threw up was the independence of the central bank in India, the Reserve Bank of India. Where do you stand in that debate? Many questions have been raised about, the RBI not being able to provide enough explanation, analysis, detail, definitely being caught completely unprepared and offering no information thereafter. Do you think the independence of the RBI has been
Menaka,
compromised?
you don't expect me to give you comments on this subject. RBI is my regulator.
Okay.
We respect RBI as a regulator, and I do believe that we are going through a significantly major event of demonetization, and we should see how it goes forward.
Okay. Couple of other things on the budget. In the last few months, we've seen this idea getting seeded into the Indian economy of a universal basic income, almost a sort of a dole to everybody, if I may call it that. Is that conceptually something you're in favor of? Because it does seem like that the government is considering it strongly.
See, I think we have to keep in mind that the world needs to address both wealth creation and wealth distribution. And we need to find a optimum equilibrium in this. The danger for any society is swing to any one extreme. We have to, on the distribution side, we got to be careful that we don't distribute of a smaller cake continuously, because that itself doesn't solve the problem. At the same time, as the cake grows, you need to find fair and equitable distribution methodology. And I think this is where the world right now is evolving, how we're going to see that fairness happen. The danger, if any, is in the desire to get to fairer distribution, we don't have a challenge to creation of wealth itself.
So you're not broadly against the concept, but you would be very careful about the implementation.
Absolutely, like in everything else.
Okay, fair enough.
And any policy decision we take has to factor in the challenges of implementation.
Okay, back to the budget. There is this another expectation of some sort of tax being imposed on cash transactions. Somebody's talking about a banking transaction tax, which takes me back to Mr. Chidambaram's time. How are you seeing this evolve? And in a connected way, I want to ask you, we've had different bankers come up with different estimates on how much or how much of the deposits that they've got thanks to demonetization will quickly go back into the system, how much they'll be able to retain. I think last said SBI's Arundhati Bhattacharya said about 40% of the deposits.
I think
the
two different subjects.
So the two different topics. Okay. I just wanted to.
On the first one, as far as the fisc is concerned and what the government is going to do, you just wait for 2 weeks and you'll get all the answers.
Okay, fine.
And as you know, we can speculate, but
no point.
Yeah.
Okay.
So let's see what.
But you're in favor of a cash transaction tax?
I am most in favor of a budget which has a significant fillip to employment and jobs.
Absolutely. That's our theme at BloombergQuint. Where are the jobs?
And no, therefore I think the budget will be thinking about how do you address creation of new jobs in the country. And I think globally, jobs is a big challenge, as the digital world has some impact on creation of jobs, and especially with new skills. On the point about how much money remains with the banks, does not remain with the banks, I think that's a matter of debate. But on a broad basis, if we believe the net currency out of circulation is anywhere between 5 to 6 lakh crores, I think over time, as this multiplier effect happens on that over a year or two, I think you should see something like 3.3 to 3.5 times this number as the net savings created in the system. And then it will go across a range of products, not only bank deposits, it will go into mutual funds, it will go into insurance. So you'll see a significant growth in formal financial savings.
Okay. If all 15 lakh crores has come back?
We don't know.
We don't know, and the RBI said it's still tallying numbers. Surprising that it's taken them so long to tally it. But if all of it has come back, would you in some sense say that we had all the estimations wrong of this, or that it was not as much black money in cash as was anticipated?
No, I think
Menika, you're also failure of it. How does one understand
you also
this?
Keep in mind that this is a digital world and analytics world. Therefore, the government and the banks have all the data of all the money that has come in. So there's a trail to every single rupee which has come into the system. And if you systematically go and analyze that data, you'll get the right answers, and sooner the better.
But it could also be that maybe much of it was not black cash at all.
But I think we really need to see the data and see the analysis of that before taking a judgment call on how much was black money, how much was not.
Okay, so we've discussed the budget, we've discussed the macroeconomy, currency, commodities, interest rates. The last question is on markets. It's been a hell of a ride for the last 1 year. We're finally seeing some buoyancy in stock markets. What's your outlook for 2017?
On that, the first question which you in many ways asked, I think markets are driven by two forces. One is global flows.
Yeah.
Second is the domestic flows. And this is in the context where I believe the broad GDP numbers should be in the range of 6.5 to 7% for the Indian economy. So if that's the GDP number growth, and this battle or tug of war between global and domestic flows, I think I'm very, very enthused about domestic flows and the kind of flows we have seen in mutual funds, into insurance, which is coming domestically. And that is a very strong factor. Indian mutual fund industry has come of age. And with the increase in formal financial savings, I think the domestic flows have become a significantly higher impact than what they were. On the other hand, global flows will be driven by what Mr. Trump says, what the Chinese premier says, what happens politically between different countries, and you cannot depend on those necessarily to be positive. So we have to plan on the basis that they may be negative, and if they are negative, how are we withstanding as markets? If on the other hand, for any reason they get positive, that's a bonus. But your base case planning has to be that they will be negative.
But if you are only to rely on domestic funds, then you're not seeing that much potential for an further upside move.
So obviously, if there is
the
both
key
global
indices.
funds and domestic funds, both are in the same direction, which is new money, you'll see markets go up faster.
Yeah.
If it is
Sans global funds, if it's just domestic funds, you're saying
I-
it could be a status quo here?
no, if it is only domestic funds, it also depends on what is the status of global funds. Is it negative or neutral?
Okay, so what is it that your instinct tells you will
My
be the
instinct
case?
tells me that
You've laid out all the
my
scenarios for me.
instinct
What
tells
do you
me
think
that
will happen?
we will see a steady but modest growth in Indian markets, and as inflation gets lower, investors have to measure their real returns differently. Therefore, if inflation is at 4.5, a 8 to 12% return nominal is not a bad return.
Yeah, Mr. Kotak, we spent so many Davoses talking about the NPA problem in India that I almost hesitated. The question is not on my list, but I think I'll ask you nonetheless. Are you seeing any break in that crazy deadlock? Are you seeing any relief come through this year? Doesn't seem to me as if there's been much movement.
You can't wish away a bad loan. It has either got to be paid or you got to take the write down.
Yeah, but the question was, we thought at one point that the growth in NPAs had stemmed, but it hasn't, because the last few quarters, you can see private bank balance sheets show
I think the stress is there in the banking system. Banks have been busy for a while, so banks better get focused on handling the stress. You can't wish away debt.
Will it be worse because of this demonetization thing?
I think you got to look at case by case. The key issue is leverage. How much is the excess leverage corporates had?
But you know that, so I'm asking you
So
less for a scenario and more for what you think the case
if growth goes a little slower for a quarter or two, which is what
is.
it
What
is,
is expected?
it makes leverage bite that much more. If growth comes back, leverage bites less.
So growth is expected to be slower, so you're in a sense telling me that the NPA problem could get accentuated.
But if growth comes back in 2 quarters, you could see some improvement thereafter. But I fundamentally believe that leverage has to be solved and banks have to face reality.
And it's still going to take a long time.
It will take its time.
All right, I'll stop
Thank
asking
you.
you for when.
Thank
you,
you.
Mr. Kotak.
Thank you
for
very
your
much.
time.